Welcome to Cold Brew Finance's U.S. End-of-Month Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the month ending Monday, March 31, 2025. Kicking things off, I'm Max Profit. Key indexes were all down significantly this month. The Nasdaq Composite Index led the decline, falling 8.2% to 17,299. The Russell 2000 Index dropped 6.9%, while the S&P 500 Index fell 5.7%. All indexes showed strong downward volatility and consecutive monthly declines. Market breadth was notably weak across all major indexes. The Nasdaq Composite showed particularly bearish sentiment with 2,443 declining stocks versus just 680 advancers. The S&P 500 saw more than twice as many declines as advances. Three-month returns reflect broad market weakness. The Nasdaq Composite showed the steepest decline at minus 10.4%, followed by the Russell 2000 at minus 9.8%. The Dow demonstrated relative stability with just a minus 1.3% return. Looking at annualized returns, the Nasdaq and Russell 2000 show concerning patterns, with three-month annualized declines of minus 36.3% and minus 34.5% respectively. Only the S&P 500 and Dow maintain positive one-year returns.
Checking out best and worst performing equities, I'm Penny Stock. TransCode Therapeutics topped gainers, soaring 900% to 0.49. Regencell Bioscience showed exceptional strength, climbing 593% with strong upward volatility. Nugenif rose 521%. Looking at three-month performance, Regencell Bioscience delivered an extraordinary 545% return. TransCode Therapeutics and MicroAlgo also posted impressive gains of 488% and 545% respectively during this period. On an annualized basis, three-month returns were remarkable. TransCode Therapeutics showed a 1,424% ARR, while Regencell Bioscience posted an even higher 2,093% ARR. MicroAlgo matched this performance with 2,088% ARR. Among large caps, Dollar General led gains, rising 18.5% with strong upward volatility. Huntington Ingalls Industries advanced 16.2%, while FMC gained 14.3%, though showing a very strong negative trend. Three-month returns show Dollar General leading with a 16% gain, followed by HCA Healthcare at 15.1%. FMC lagged with a minus 13.2% return over the same period. Analyzing annualized returns, Dollar General achieved an 83.6% ARR over 3 months. HCA Healthcare followed with 78.2%, while Mosaic posted 47.2% for the same period. Among declining stocks, Cutera fell 97.2% to just 0.1, hitting new all-time lows. Mullen Automotive dropped 95.9% after 4 consecutive down months. Wang and Lee declined 95.5%. Three-month returns were deeply negative. Mullen Automotive plunged 99.9%, while Hepion Pharmaceuticals fell 98.2%. Cutera declined 97.2% over the same period. Among the worst-performing stocks, Cutera led the declines, plummeting 97.2% to close at 0.1. Mullen Automotive fell 95.9%, while Wang and Lee dropped 95.5%. Both WellChange Holdings and Hepion Pharmaceuticals showed significant losses, falling 93.5% and 93.1% respectively. Among large-cap stocks, Airlines led the declines. Delta Airlines fell 27.4% to 43.60, while United Airlines dropped 26.3%. Teradyne declined 24.8%, hitting a new one-year low. Caesars Entertainment and Dexcom also showed weakness, falling 24.7% and 22.7% respectively. Three-month returns were notably negative for these big caps. Teradyne showed the steepest decline at -34.4%, followed by United Airlines at -28.9%. Delta Airlines, Caesars Entertainment, and Dexcom all posted significant quarterly losses. The one-year performance shows Dexcom down 50.8%, while Caesars Entertainment fell 42.8%. Teradyne and Delta Airlines showed smaller annual declines. Notably, United Airlines managed to post a positive annual return of 44.2%.
And now on to U.S. sector performance. Leading sectors show diverse performance patterns. Energy leads with a 3.7% gain to 715.74, showing a very strong upward trend after 3 consecutive monthly gains. Utilities edges up slightly, while consumer defensive achieved a new all-time high, despite dropping 2.7%. Market breadth reveals concerning signals. Healthcare shows significant weakness, with 846 declining stocks versus 223 advancing in the past month. Basic materials similarly displays poor breadth, with declines outpacing advances by more than 3-1. Utilities maintains the healthiest balance. 3-month returns highlight energy's strength with a 9.3% gain and the highest daily return average. Healthcare and consumer defensive both show positive momentum over 3 months, despite recent price declines. Basic materials lags with negative 6-month and 1-year returns. Analyzing annualized returns, energy shows remarkable strength with a 44% annualized rate over 3 months. Healthcare posts a strong 27% annualized 3-month rate despite recent weakness. Basic materials continues to struggle with a -20.5% 6-month annualized return.
Energy stocks showed remarkable strength today. EQT reached a new one-year high at 53.43, up 10.9%. Hess displayed strong upward momentum, gaining 7.2% with notable volatility. Cutera Energy, ExxonMobil, and ConocoPhillips also posted solid gains between 5.9% and 7%. Looking at 3-month returns, EQT and Hess lead the group with returns of 15.9% and 20.1% respectively. Cutera Energy follows with 13.2%, while ConocoPhillips shows more modest gains at 5.9%. Annual rate of returns over the past 3 months show Hess leading with 111.9%, followed by EQT at 83%. Cutera Energy and ExxonMobil posted 66% and 51% respectively, while ConocoPhillips trailed at 26.5%.
The worst performing sectors showed significant declines. Consumer Cyclical and Technology led the downturn, falling 9% and 8.8% respectively. Communication services dropped 8.3%, while technology notably showed very strong downward volatility with 3 consecutive monthly declines. Market breadth was notably weak across these sectors. Technology showed particularly poor breadth, with 578 declining stocks versus just 108 advances. Consumer Cyclical had similar weakness with 403 declines against 83 advances, while financial services saw 493 declines to 118 advances. 3-month returns were deeply negative for several sectors. Consumer Cyclical saw the largest decline at -14%, followed by technology at -12.8%. Financial services was the only bright spot, gaining 3.1% over the period. Annual rates of return highlight the severity of recent declines. Consumer Cyclical shows a minus 46% annualized rate over 3 months, while technology indicates minus 43%. Despite recent weakness, financial services maintains a positive 18.3% one-year return.
Consumer cyclical stocks faced significant pressure this month. Caesars Entertainment hit a new one-year low at 25, falling 24.7% with strong downward momentum. Lululemon Athletica dropped 22.5% to 283.6, while Nike also reached a new yearly low at 63.48. The 3-month returns show substantial weakness. Deckers Outdoor recorded the steepest decline at minus 44.9%, with particularly high daily volatility. Caesars Entertainment and Lululemon both saw 3-month declines exceeding 25%. Annual performance metrics highlight the sector's challenges. Deckers Outdoor shows a dramatic minus 91% annualized rate based on its 3-month performance. Ralph Lauren stands out as the only stock showing positive returns across multiple timeframes.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.